Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday, the 13th of July, 2017, getting on to 2:20 p.m. Central Daylight Time. These numbers aren't wrong, folks. 46.5 lower in soybeans, 25 lower in the wheat market, corn down 15 3/4. This is what happens in weather markets as the weather changes. So what we've had in these markets is fear of this hot weather that we've heard, the drought situation in the Dakotas, kicking up all these markets, and now the weather is moderating, and that's all I can say. I mean, this can change on a dime, and the markets are all rushing for the same exit at the same time. So it's pretty interesting. It doesn't have much to do with the dollar, which is up on the day just a tick. Yeah, a tick. It doesn't have anything to do with what's going on in financial markets. There's no big action one way or the other. So when we come to the market, you can see that you went up to $9.25, up to $10.27 3/4 on a weekly chart. And for this week, you're down now 23.5 cents. Not so bad, but down pretty good. And this whole rally was about $1.27. So half of that would be about 55, 60 cents. That'd carry you into these lower areas here in the 90, 950 area, something in that area if you're just looking at that. When you come over to an area chart of closes, you've now gone from your high close just, what was that, 2 days ago at 10.43 1/4, and all of a sudden you're down 60 cents. That's $3,000 a contract, and it was certainly a nice opportunity for farmers who may not have had a hedge on to take them off or put them on. Depends which way they were going. I know some farmers that, if you will, they'll sell their beans, buy a call, wait for a pop and try to get a double whammy. They've sold it at one point and they're trying to make money up. It goes all kinds of ways in these markets, but that's what you're at, a correction, and you can see it. Now, we had the pause signal yesterday with an inside day, but that's just a pause. Which way is it going to go, up or down from there? It broke through the low right here, and that was it. Why? What would cause that? Well, if you take a look at how the swing lines worked, and we'll come back to yesterday, 10.22 1/4. Go and listen to what I said on yesterday's tape. I said, what could be the problem in the market? Could be, is if the market gets under 10.22 1/4, but I'd still be looking to see what the embedded slow stochastic is doing. So we know that the market get hit today here. We know that the key moving averages are coming together, and now they may not get a crossover. Notice how you're coming like that, but you could get a pretty big whack the other way now. You've got to keep your eye on what these moving averages do, but until they're broken, they're not broken. So that means support 967 1/4 to 964 3/4, the combination of the 100-day moving average of closes and the 18. When you look at Bollinger Bands, you rode 6 days in a row that band up. Then you move to the right-hand side, and suddenly you're far away from it. So all you did is ride it to an extreme, and the market has paid that back. To me, what's important is you've lost the embedded reading. Now, unless you gain it back immediately, I think you're going to get price in these moving averages to come together. And the first one's the key one, which is 967, the 100-day average of closes. Meal, same thing. But here's the difference in meal from soybean oil. All you have to do is get to 317.10. You hit 317.20 and you stopped already on this $18 break. You don't have much more to go if you have anything to go. If you want to extend the break, 311 would be nice. But that's what happens in these markets. And one of the things that, if you're a subscriber to my information, I've been saying for a couple of days, I said, I just don't play the weather markets. And the reason is, my history with them has been terrible. You've got to be lucky to catch the move, And then where do you come out of it? It's easy to say if you caught it, oh, I'm going to take some money off the table, I did great. But if you're chasing the market on this, it can be treacherous. Let's come back to the next chart here. I hit the wrong button there. Soybean oil. This is the weak sister of the bean complex, but because the traders panicked today, dropping the meal, $18, it's $1,800 a contract. Well, this got support as traders were taking off the meal oil spreads, and that supported the market, and it should have support into here, but you're overbought. You're in an uptrend. Support's 32.69 to 61. I don't see a thing to do with that. In the corn market, vicious. 417 straight down to 381 3/4 today in 48 hours. It's a pretty interesting trade. And the market didn't even pay attention to the 18 and the 100-day average of closes. This was how you finished yesterday, and you just slid right through that. Is it going to the lower Bollinger Band? I doubt it. Is it getting overdone? Probably so. But what do you do with it here? Nothing. Too hard to trade. Wheat market. You had the pattern, let's go to yesterday, of higher lows. I pointed this out. I said, is this the higher high? That's the original setup, but now you're stuck with lower highs and higher lows off the new setup. I don't like that. In addition, you're overbought. I don't know what to do with the market. It's not a sale, but it's certainly not a buy. And now you get it where it's challenging the 18-day average of closes. Notice how it breaks down to it and it finds its support. Sugar. Let's go to yesterday. Had the market gotten under 1320, I thought the market was in a setup to get to the lower Bollinger Band, but it had to get under 1320. And I said that because that would turn the swing line then with lower highs and lower lows with a downward momentum. Instead, the market never did that, just stayed over the 18-day average, gave you a good bounce, and now you've turned the momentum up. But you're not trending. You have a lower low, a higher high pattern that's just whipping back and forth here and not offering you any real trade. Coffee is similar to sugar. The coffee market has a pattern of lower highs and higher lows, I want to say it that way with today's action, and lower lows. Higher high, lower low. Without today's action, you had a pattern of lower highs and lower lows, but you were still over the 18-day average of closes. As the market came here, you were also overbought as can be. Nothing to be done. It stayed that way. Cocoa market, all the softs are trendless in my opinion. You have that higher high pattern, the lower low. Nothing to do there. Let's go to yesterday. If you rally, resistance I'm thinking would come in at the 18-day average of closes. Doesn't have to, but that's where I'd expect it. And you're oversold. Is there a sell configuration? No. Is there a buy configuration? No. You're under the 18-day average. You can't buy it. You can't sell it because you got the higher high, lower low, and you're oversold as can be. And you go back to the 18-day average, and the market's looking for direction. The cotton had a shot to be good had it taken out yesterday's lows and closed higher. Now all the market's done is it's re-entered oversold territory. It's got lower highs, lower lows. Support, I think, will show up at 66.26. You're just shy of it by 4 ticks today, but this is not a market that's throwing out new sell signals because it's oversold. Cattle market, overbought, in an uptrend, trying to push out the upper Bollinger Band. Do you buy over an upper Bollinger Band? Well, I certainly teach you don't, because you only stay 5% of the time over it as the rule of thumb. I count each day as one of those percentage points. So you got a 3% chance of staying over that upper Bollinger Band. Another way to say it, 97% chance the market's going to pull back under that band. That doesn't mean it gets bearish, but the combination of being overbought and into resistance, no interest to a lot of traders. I'm one of those. And the same in the feeder cattle. The trend is certainly to the upside. The market did not fall apart. It's using this area as a base area. You can see that pretty clear. But would you buy overbought condition? I would hope not. In the hogs, sideways action makes this a difficult trade too. In other words, not a lot to do in the commodities, the agriculture ones. You've got a pattern now of a higher high with today's action. Today's high took out 83, 82, but you got lower lows prior to that. You have no momentum to speak of. It's just going sideways. So the swing line is void of trend. The bias is up, and momentum is sideways. Pretty hard market to do anything with, and that's what you run into sometimes. So you have to be patient. But the key is staying away as best you can from those weather markets. Now, I want to remind you, the August issue of your Modern Trader magazine is now out, and it's got a whole new look to it. When I tell you new look, it's completely different in the feel. The writing is the same. This is what the cover is going to look like for the month of August. These are how they're doing their new articles, by trades, and they're broken down: options, stock market, forex trades, earnings on the different corporations, transactions that you might want to look at. Then it's got the trading methodology in here and fundamental stories. Now, the value of this is $79.95 a year for your 12 issues. We offer it for free. If you go to Modern Trader, you will see that you pay for it, and that includes your free Market Focus. It comes by email. Either call us, go to our website, you'll see a carousel of free offers. Click right up here, and you can get, if you see the icon on the YouTube video, it will bring you to the forum page. And underneath us on many websites, it does say, click here for Ira's free offers. Do so, and away you go. I'm Ira Epstein. You have a great day, and I will see you all tomorrow.